Welcome back, everyone, to the Crypto Code by ICN.live, where we come live every week because so much is happening that we have to stay up to date with what is going on. I can't believe what has been happening over the past week, guys. So much going on. The 12-day war, as it's finally called, is over. So much happened, and this is why we're doing these lives, so that you can stay up to date with what's happening right now. So let's go over it all. The good, the bad, and the ugly. I'll talk about what's happening in the markets, some exciting developments happening in the industry. I'll talk about, stick until the end because you cannot afford to miss this. Let's get straight into it. Please smash that like and subscribe button. It really helps the algorithm if you do it early on in the video. It really encourages us to keep making these videos for you. Thank you so much for being here. I really, really appreciate it. We always start off the same way. So we'll go and look at what's happening with the crypto bubbles. We'll look at the past week. So it's obviously during, times of war, the markets were acting up, and we saw Bitcoin go below 100K for a while. Things are now doing much better. We'll go over a little bit what happened during this war. I mean, in the past week, what did we see? We saw the U.S. actually directly hit Iran, the nuclear sites. Everyone obviously saw that, and us being in Dubai, there was a huge interruption in the skies because Iran decided to hit the the American base in Qatar, which was horrifying. We thought we'd be stuck. We would be stuck here, but things picked up, and thankfully, hopefully, it's over. The ceasefire is in effect right now. So the markets are acting. I think they're picking back up again. It's definitely not an altcoin season, although we see here like Syrup and Form and some weird altcoins that are doing quite well. But over the past day, we've seen a kind of a downturn. Everything from Pi is down 13%. Virtual Protocol completely losing everything pretty much that it's done so far. Sui is also down. So the markets are not looking that great. Moving on, let's go straight into ICN.live. So this is a platform that we've built specifically for you guys. The team is working day in and day out to make this the best news platform for you. So please do check it out. It's ICN.live, where you can find all the latest information happening in Bitcoin, in crypto, in AI, in gaming, and so on. So here you see it's very clean. The user interface is very friendly. Kraken secures the Mika license to expand digital asset services. It's always up to date. Subscribe to the Telegram today, and you'll get the latest notifications straight to you, so you never miss out on market moving news. I'm going to talk about a lot of these things here. Chainlink and Mastercard, we're going to talk about it. South Korea, we're going to talk about some of the IPOs that are happening in the space as well. So much going on. Metaplanet capital raise strengthens Bitcoin strategy. A lot of companies are adding Bitcoin to their treasury. A lot of companies are being set up just to buy Bitcoin. We'll talk about that as well. So much going on. Again, check out the Key Opinion Talks. We have a new one now with Ross Shmeliak, who is the member of he's the co-founder and CEO at Stobox. Check out this piece where he talks about the exciting things happening with AI and RWA. It's a fascinating piece. Go check it out. ICN.live, Key Opinion. I love these pieces, and go check it out. Again, subscribe to the Telegram. It's free, and you get all the latest information straight to you, so you don't miss a thing. Now, what I also love about this platform and this everything that we built for you here on ICN.live is you can check the prices, you can check where the greed and index is at. So let's go straight into Bitcoin and see what's been happening. So I'll refresh it just to make sure we're the latest happening. So $107,000. The war was literally 12 days. It felt like it was longer, but we saw kind of the price go down from $111,000. It did touched $90,000 right here, I think around 22nd of June. And as soon as the ceasefire was announced, it pumped back up, and we're now sitting at $107,000. If the ceasefire holds, and I do believe it's going to hold because both sides could not handle more war, and we'll talk about actually the cost of everything. Forget the lives, and I feel obviously terrible for everyone that lost their lives for something so stupid. We'll talk about the actual dollar cost and of what a war costs and the opportunity cost, and it's just really sad that in 2025 we have to go through this. I'm 39 years old. I think my generation has seen 9/11. We've seen 2008 financial crisis. We've seen COVID, and we were literally in the cusp of World War III. I'm just happy that it's finally over. So moving on, I like to also touch on Bitcoin dominance. I feel like, as we said previously in our previous videos, this has been a Bitcoin cycle, Bitcoin and stablecoin specifically, because of everything that's happening in the US with the Genius Act and everything that's happening with all the corporates and banks understanding that how powerful stablecoins are. It's the biggest product market fit in the industry. It makes a lot of sense, and the returns and the yields that are happening across that through RWAs, through commodities, through real estate, through treasury bills is massive, and we're just only getting started. It's already it's super exciting to see where this industry is going, especially if you've been in the digital assets and crypto industry for the past 10 years. We only had USDT at one point, and it was there was so much scandal around their transparency and all that. Now we have so many different players coming, USDC, Circle, and there's just so much going on. We have to stay up to date because the opportunities are immense. So back to Bitcoin dominance, we are sitting today at 65.8%. The past year, it's up 20%, which is amazing. Usually when a cycle happens, we see Bitcoin dominance start to go down after Bitcoin hits its all-time high. We then see Ethereum. We used to see Ethereum hit its all-time high and following all the altcoins. But again, so much action and so much interest and demand in Bitcoin specifically that I think this is probably the highest it's been in a long time, which is, let's say, I think here 70% was in 2020. I think that's during COVID when the market was hot before the downturn, where it went down to 40.8% during the last bear market. That's actually very interesting. And then we saw it kind of trade sideways, not trade sideways, but the dominance kind of stayed from 46% to 40%, whoa, in 2023, before now doing a huge climb from November 2022 all the way to now. It's hitting its all-time high. Is this a sign that we might see a transfer of dominance from Bitcoin to Ethereum? Some people are excited about that. Some people are skeptical about that. I guess we'll only find out. Again, I think there's so much attention and so much institutional attention on Bitcoin that it's become the asset class that's going to hedge against inflation, which we'll also talk about. But yeah, I'm a complete Bitcoin maxi. Altcoins have been not performing as well as we wanted to, and I guess that's because of fundamentals. We have a whole watch list we'll go through at the end about fundamentals and about overvalued projects that didn't fit the valuation that they went out with, and that's why we always tend to see them launch with such hype, but then at the end of the day, when the dust settles, we see those prices and the valuations go down. So that's interesting. Now, I found this on X that I wanted to talk about, is that Bitcoin dominance is now at 70% if you exclude stablecoins. So that's peaking right now, and that could be the sign we're at the top right now for this cycle, or it could mean that we're just going to continue watching Bitcoin really dominate this cycle. Moving on, I love to look at Ethereum as well, because it is obviously the second largest, and they have the biggest TVL in terms of DeFi, but the price action has not been great, and we'll talk about that as well. But let's just see what's been happening over the past year, so we can compare this with Bitcoin. Bitcoin again has gone up 20% in dominance over the past year, whereas Ethereum has completely underperformed. It's gone down to 9%. If we look at its peak, it was almost 20% dominance at its peak, and this was when really DeFi was hot, when a lot of TVL and a lot of NFTs, a lot of DeFi projects, a lot of transactions were happening on Ethereum. We start to see that decline happen from, let's say, 2023, where it hit 20%, all the way down to 9%. And I think there's several reasons for this. Number one is obviously Bitcoin becoming the household name. Everyone knows Bitcoin in terms of a great asset to hold and to hedge against all of the things that are happening around the world, especially with currency printing and inflation and all that. But another thing that I think that's happening, and I kind of see it on the work that I do with accelerator programs across layer one chains like SUI, is competition. We've seen Solana really dominate with meme coins and with a lot of projects that are, I would say mainly meme coins, but then we've seen the likes of SUI really dominate with technology that's faster, cheaper, essentially, I would say even better than Ethereum in some ways, but obviously not in TVL and not in kind of like Ethereum has had the lead in innovation. The others, I would say, are building the equivalent of those projects on those chains at a fraction of a price, much easier for developers to build on it as well. And they've learned about all the difficulties that that has been built on Ethereum, try to make it better. So competition is definitely key, especially within this space. You have a lot of very smart folks building amazing things. And from everything that I've seen, to be honest, in terms of like which altcoins to look at, I think the best performing ones that did really well are the layer ones. Layer twos had their moment last cycle. Polygon, Optimism, Arbitrum, they tried to solve for the cost and speed that Ethereum kind of was lacking at the time, and it did solve them. But then you had layer ones coming up, purpose built, figured out what was wrong with the last tech. How can we improve it? Get the smartest minds together and really build this out from the ground up. And that's what we've seen. And I think that's why Ethereum's dominance has taken a hit. Again, it's still incredible to see that most of the total value locked in DeFi is still on Ethereum. So does this mean that it's an undervalued asset, or is this potentially the downfall of Ethereum? I guess we'll find out by the end of this year. I have shifted my bags away from Ethereum, to be honest with you. I'm fully on Bitcoin just because of the momentum that's going on with Bitcoin. I do have a small position on Sui because we work with them, and I think I've met the team. They're doing really cool stuff. I think there's a lot of potential there, and I have a feeling that they could win this layer one race. So yeah, those are the two that I'm in right now. But Bitcoin for me is just the best, honestly, the best. So I found this post as well. Nothing has changed for ETH. Some people are still ETH maxis. It's perfectly following BTC's last cycle rally. 8K to 10K ETH will happen this cycle. I don't know. Not too sure about that anymore, to be honest with you. I haven't really seen, massive moves and adoption, kind of like not major innovations or apps building on ETH that have, caught the attention of everyone on this cycle. Institutions seem to be building kind of like localized chains specifically for their needs, especially with RWA. I think Avalanche also does private kind of networks that these institutions can control to some extent. So it's not really decentralized, but they can still have they can have like a hybrid kind of approach with it and can really control the environment. So I think that's kind of the direction we're going to see with these institutions tokenizing a lot of the commodities. I think for real estate, we're seeing that as well. And a lot of these chains are starting to offer these kind of like private networks that you could build white label within them. Also met the folks that are building like a chain that's a SaaS model where it's gasless essentially. Anyone can you pay a monthly fee and you can kind of build your own ecosystem that's controlled. Your users don't need to pay gas. So so it's very interesting to see how that's also playing out. I think at the end of the day, this is a similar approach to AWS, Azure, the cloud services. One day we're not going to know what technology is powering some of these apps, and I guess that's not a bad thing, but it's been fascinating to watch how this technology evolves. Eventually, it's just going to be the tech stack behind the cool stuff that's happening. So that's my take on that. Next up, I wanted to bring up this awesome product that we have been building here at ICN. It's called ICN.click. We launched a new media product that is essentially a media launchpad built for all digital creators that have courses or programs or digital products that they want to sell, but you need to be in the UAE. So this website is live now. You can go to CLIQ.ICN.live. So beyond influence, build your personal brand. I cannot express how important it is to build your personal brand. Create the content, find what works for you, promote yourself in a way that only you knows. This is like, figure out what your strengths are, share the experiences that you have because those are unique to yourself. And we at ICN are happy to help you build that out. If you've been thinking about it, if you've been working on it, we can help you kind of structure everything and really get you out there. So you don't need to do the editing. We'll help you do everything with all the strategy and the launching as well. So we are the first media launchpad here in the UAE. If this sounds like you and this is something that you've been wanting to work on, please do check out CLIQ.ICN.live. It is an elite studio production, viral content editing, global matrix distribution, and it's very easy for you to get the vision that you want to do. We'll help you get to that point. It's really, really very powerful service that we can help you do. So you come to the website, you find all the information that we have here. We'll help you with strategy and branding. We'll help you with production. We'll help you with post-production, distribution, and conversion. It is daunting to do this on your own. We're here to help you out, make it easy. We have a team behind this. We're very excited to announce this new service. And all you have to do is literally just click on this website, come to the website, click on the application, just fill out your name, your email. Are you based in the UAE? The kind of program that you're running. It could be about branding. It could be about real estate. Whatever it is that your strength is and that you're working on, we can help you do that. So that's AI, education, fitness, blockchain, marketing, even anything else that you have. We'll help you structure that and help you take care of everything. Very easy, very quick. You can fill this out in 2 minutes, submit, and the team will be in touch right away. So I wanted to show that to you guys because we've been working hard on it and it's now live and you can go and check that out. Okay, let's get back to the insane 2 weeks that we've seen, and that is this war that's now being dubbed the 12-day war. I guess that's how they're going to talk about it in the history books. Another war in the Middle East, which is unnecessary. I've lived in the Middle East. I've lived in Lebanon. Well, I was born in Saudi Arabia, lived in Lebanon since 98, and I was actually there in 2006 when the war with Israel happened. The first night when they bombed the airport, I firsthand felt what it's like to be under that kind of thing, and it's horrible. I was like 20 years old at the time. I was scared. It's terrible. It's not an experience I would want anyone to see. And then it got so close to where we are in the Gulf that it's fascinating. Since Trump has gone into power, it was the tariff wars, right? So we felt like we all had to brush up on our economics and try to figure out global macroeconomics. How does it all work? How does this all tie together? And how, figure out what did China do over the last 20 years that got it, took it to the next level and make it number 2 in the world economy, and all the things that the U.S. did not do over the past 25 years. The past 25 years, what did the U.S. do? They went to war in Iraq over weapons of mass destruction that never even existed, and all that cost money. And we'll talk about that as well. And if you've watched some of the previous videos, I think one of the biggest dangers or the risks that the U.S. has right now is just not being able to maintain its spending habits. Essentially, it's the same as getting a credit card to pay for another credit card. They're so in debt for the things that they're spending on, and most of it is useless. So anyways, yeah. So back to Trump coming in power, us becoming more economic aware. So studying economics again, macroeconomics, and how the world works. To now, over the past 2 weeks, just figuring out geopolitical politics. It's just ridiculous. And what's nice this time around is the Republicans in the US, like Candace Owens, Tucker Carlson, Steve Bannon, all these folks who, I think were very pro-Iraq war before, are now sounding reasonable. They understand that the US does not need to be dragged into another war that has nothing to do with them. There's no risk and no danger to the US directly. So it's just fascinating. The past 2 weeks, I've been glued to YouTube watching Candace Owens, Tucker Carlson. His interview with Ted Cruz is just unbelievable. And then Piers Morgan, of course. Piers Morgan is very good at getting both sides of the political spectrum. And then you hear one that you're like, yeah, that's reasonable. And then you hear the other side, and it's just like, wow, how do these two people think so differently? And I get it. And this is what I wanted to also talk about. It's the compassion across both sides. I understand both sides, what's going on. But at the end of the day, war is horrible. Diplomacy should always be used as the first tool in any government's toolkit. But yeah, so going back to it, and we'll talk about it. So Steve Bannon has been an outspoken Republican, pro-Trump, MAGA, saying we should not be getting into another war. And Trump's whole campaign was actually about not doing another forever war. So I was happy to finally see some pushback, especially on the Republican side. I thought they were completely pro-war. So yeah, 12 days of war was not good for the crypto markets, essentially, obviously. Not good for the stock markets. Not good for volatility. Everyone doesn't know what's going to happen next. A lot of airlines in the region were shutting down, canceling flights because the airspace was shut down. I'm sure you saw the footage of missiles being shot from Iran all the way to Israel, which are not neighboring countries, by the way. These ballistic missiles were flying across because Iran doesn't really have an air force that can just fly over Israel and bomb them. And the other way around, you had Israeli planes just like, it's crazy how in 2025 this can be happening. So obviously everyone was scared. The markets were hesitating. The Bitcoin went down below 100K within reason. It makes a lot of sense. Moving on. Secretary Marco Rubio. What I wanted to talk about here is, so the United States, dropped these bunker busters onto Iran. They supposedly destroyed the nuclear program, but now there's some leaks. There's some intelligence leaks, which I don't understand who's doing it, but saying that maybe actually they didn't. Maybe Iran moved everything at the time, but I hope this is over. Again, I don't think violence is the way to stop something. Diplomacy should always be number one. And then the United States is just so over their heads. Like, their country is so in debt. There's so many issues internally that it's, come on, like, stop spending money on stuff that you don't need. Like, yeah. So you want to know how bad this is? Here, I found some stats that I wanted to share with you guys. So a lot of Americans are waking up, especially the younger generations. They're saying no more war, no more forever wars. The Middle East has had enough. We do not need to keep doing this. And the reasons are clear, because now we have history that we could look at, specifically with the war in Iraq. So since July 10th, Israel cost U.S. taxpayers $75 billion. War with Iran could cost trillions of dollars based on what happened in Iraq. So the cost of the war on terror, which was labeled back in the day, was $8 trillion of taxpayer money. 900,000 people lost their lives. 7,085 U.S. troops died. So a lot of people, unfortunately, lost their lives. So this cost completely, $75.6 billion to Israel. This is money that essentially goes out of the U.S. economy. It's taken from the taxpayers' money, and on top of that, the United States is bringing in $5 trillion. They're spending $7 trillion. There's a $2 trillion deficit, and it's not sustainable. And the debt now, let's just keep going. I'll keep going here. And I love this tweet because they put it in Bitcoin terms, like how much this war costs in Bitcoin terms. So Israel just fired a missile worth 28 Bitcoin to stop a missile worth 18.9 Bitcoin every single night for 12 nights straight. The Israel-Iran war ended not with victory, but with empty vaults. The total cost of war in Bitcoin over 12 days was wild, and the numbers are staggering. So picture this. It's 2 a.m. in the morning. Sirens are wailing. Israel launches an Arrow interceptor. That's 28.3 BTC or $3 million gone in 8 seconds. Each one of these missiles is $3 million. They fired 50 to 100 of these to stop all of the ballistic missiles coming in. That's 2,800 Bitcoin worth of defense against missiles that cost Iran 18.9 Bitcoin each. Iran's strategy, overwhelmed with volume. 400 plus ballistic missiles launched, 1,000 plus drones, cost to Iran 7,554 Bitcoin worth of missiles alone. Cost to Israel 2,100 Bitcoin just in Arrow interceptors. The math of modern war is that both sides lose. Amen. Completely. This makes no sense. There are people starving around the world. There are homeless people. And we are trying to fight each other for what? Honestly, for what? So this really annoys me. Then the U.S. entered. This is amazing. Then the U.S. entered. Operation Midnight Hammer. 7 stealth bombers, each carrying bunker busters worth $3.2 million or 30 Bitcoin. One night, one operation. Just one night, one operation. 9,442 Bitcoin worth of American firepower. The target, the underground bunkers. The result, financial exhaustion. I actually went down the rabbit hole. The whole thing costs like $350 million. If you include like moving the ships, the aircraft carriers there, the personnel, the missiles that were used, everything was around $350 million just for this one thing. And then I went down even further, and I was like, who made these bombs? These bunker buster bombs that were used on the nuclear sites? Boeing. The same Boeing that makes your airplanes makes these bombs. And then I went down the rabbit hole. I'm like, so how much of Boeing's business is actually like defense versus commercial airplanes? And it's like 40% defense and 60% commercial airplanes. This is an industry. At the end of the day, this is an industry. And what I feel and what I've been talking about with friends is like, I feel like their warehouses are just, they get full of missiles and they're like, guys, you know, there's no more space to keep making these missiles. We need to like release them somewhere. And so they find a conflict. I think that's honestly it. So final tally after 12 days, 240,000 Bitcoin worth of value destroyed, $25.5 billion. That's more than 1% of all Bitcoin that will ever exist, vaporized in less than 2 weeks. So, what do you guys think? Are wars worth the money? It's such a shame. And look at this guy. This guy who they're so good at marketing. Like he nicknames himself BB. Are you kidding me? Like it sounds like a teddy bear. He's like the most evil person on earth. Okay, so this is not only a cost to well, it actually is all a cost to the United States because obviously Israel is the biggest. You know, the U.S. supports Israel a lot. So according to the Bank of Israel, the overall economic war against Iran is costing Israel $1 billion per day. Israelis cannot sustain a longer war against Iran. Gaza and Lebanon wars already cost $85 billion, of which is 16.5% of Israel's GDP. So they could not, like, this is just way too much for a country the size of Israel. And then going back to it all, the reason I believe is one of the biggest risks of today's, of the global economy, and I'm really honestly starting to get scared about this, and I think you should also be very, very aware of this. If you haven't watched any of Ray Dalio's stuff, go check it out today. He talks about this. It's the end of it. It's the end of an empire and how the United States potentially is spending its way down to the bottom. And why this is so important is because for the first time, the U.S. national debt has exceeded $37 trillion. The last time we did this video, it was actually like $37 trillion exactly. And look at this. We just added $27 billion in a week of debt. And this is not sustainable. And the problem why it's not sustainable is because with the current interest rates, they're spending $1 trillion in interest to pay off these yields that you're getting. If you have USDT and you're getting some 4% yields, this is how it's coming, right? It's because USDT and USDC buy a lot of this debt, and then they get yields from the treasury, from the United States government, and that's part of this $1 trillion that's getting paid out. That's how you're getting your 4.5. If you have a US dollar account in a bank and you're getting some interest rate, some interest payments, that's how you're getting it. You're getting it from this debt. Now the issue here is that it's gone above the defense spending, which anyways, the defense spending alone is just ridiculous, right? We just talked about an operation that cost $300 million. We're talking about something that Israel spends $1 billion a day. And if you take this number, $909 billion, I did the math, so you don't have to. $909 billion divided by 365 days, that means the United States is spending $2 to $2.5 billion a day just on defense and war. And if you go down the rabbit hole, which I've done, the Pentagon has never done an audit because they don't know like where this money is being spent and how it's being spent and all that. What's happening? There's some technical. Let's just see. I'm checking the technical. What is? I see it on. It's live. It's working. Yeah. So that's the biggest issue, is that the defense budget and what they're spending on is just ridiculous and it's getting out of hand. On top of it, the interest is now above that. And if they don't do something to fix this soon, it's going to be a huge issue. The United States has like 700 military bases around the world. The United States spends a lot on defense stuff that is not audited. And I feel like if I was an American citizen, which I'm not, I would really be asking for more transparency on this. Very, very important. Is everything okay? Okay. So, moving on, this has been fascinating too. We're seeing the dollar weaken, okay? So if we look at the past year, it's gone down 10.5% over the past year alone, 10% over the past 6 months, to be honest with you. And so this is actually, yeah, so it's gone from 109 back in just in January all the way down to 97. But what does that mean? So let's go through it. So why is the dollar depreciating? There's political pressure on the Fed. That's number one. So speculation that President Trump may replace Jerome Powell early to push for rate cuts has rattled the markets. This has undermined confidence in the Fed's independence and U.S. monetary policy, leading investors to sell dollars. So that's number one. Number two is expectations of the rate cuts. I think we're expecting the rate cuts to happen very soon and go down by at least 60 bips, which would bring it down to around 4%. And then when interest rates tend to get lowered, that usually drives the dollar down. Number three, we have trade and fiscal headwinds. So ongoing protectionist moves, especially with the tariffs and what's going on there. Most likely we're going to start seeing stagflation, and slow growth with inflation are definitely going to start pressuring the dollar. Number four is we're seeing investors rebalance away from US assets. And what that means is that global investors have seen their US exposure essentially get trimmed after the dollar's long run, moving towards stronger performing markets like Europe and China. So what does that mean in terms of the economy? And what does that mean for you and I in terms of our digital assets investments and stock investments? So if we look at the biggest things are usually the debt financing and the global asset shift. If we look at the debt financing, the effects on the U.S. are Treasury attracts fewer foreign buyers at a higher yield and borrowing costs, and the spillover to the global economy is that the global bond markets, emerging economies could suffer capital outflows. In terms of global asset shift, we're seeing investors pivot to non-US equities. What I've also been noticing are these huge IPOs happening in Hong Kong. A lot of the Chinese massive tech companies and innovation are now deciding not to go to the US and list there. They're deciding to go to Hong Kong, where they also have huge liquidity and can raise cheap capital and really build out the products that they want to build just by doing that instead of coming to the US. So that's definitely happening. And then we're seeing reserve currency status. So dollar is still dominant. Obviously, the United States dollar is still dominant across the world, but cracks are starting to show as countries explore alternatives, specifically because inflation is happening at such a fast pace, and the United States, the interest rates are so high that the debt to GDP ratio at 120% is high. But as long as you're borrowing money to generate more revenue, then you're fine. But if you're borrowing more money and still have this massive deficit, then that becomes the problem. So what could this mean for the global economy? Well, this could accelerate de-dollarization efforts and more trade in euros and yuan potentially. Okay, so the bigger picture and the outlook here is the stagflation risk, which essentially means things are going to get more expensive, and we're going to see a stunt in, the GDP is not going to grow as fast. We're going to see negative growth again for the next quarter, which could obviously bring in a chance of recession, and a weakening dollar fits this narrative. So end of U.S. exceptionalism. A lot of it's getting more expensive to deal with the U.S. because of the tariffs. But again, at the end of the day, if the US dollar does go down, then it's going to make it cheaper for imports, for other countries to import US products. So we'll just have to see how that all ends up. So the summary is that the dollar is sliding due to Fed independence concerns, rate cut expectations, mounting trade, fiscal challenges, and a global shift away from US assets. And for the US, a weaker dollar helps exporters, but boosts inflation and borrowing costs. And for the global economy, this spurs volatility. It pushes capital into non-US assets and could enhance momentum toward de-dollarization. So that's what we're seeing across the markets, and a lot of the news is around that. I expect this to keep happening. And we'll just have to see what happens. Next up, in the good news, we'll go to Jerome Powell and basically now allowing banks to trade in crypto. So let's get straight into that and talk about the latest that's happening with Jerome. Oh, before I move on, so the USD has now lost more than 10% of its value this year. Its worst first half in almost 40 years. Let's see what else they talk about. Oh yeah, I love this one. At least Fartcoin is holding up, so economy is strong. Yeah, that's a good quote. So the DXY has dumped to its lowest level in 3.5 years. It's down 10% in 2025, which is worst performance since 1985. When the DXY goes down, a massive crypto bull run can happen. So people are very bullish about this. Let's see how this continues. I think it'll continue to go down, and we'll see if this has an impact. Obviously, I'm just happy that the war is ending. So that's, for me, the biggest thing. Back to what's happening in the U.S. and the broader concern that I have, and not only me, obviously, a lot of economists are also having, is this mounting debt and this printing of the currency that's happened over the past, I want to say, 7 years. So the savings account is an illusion, and this is why Bitcoin is so powerful. It gives millions a false sense of security while inflation quietly drains their wealth. This is why we save in Bitcoin, and this makes complete sense. Bitcoin is the only asset that is not inflationary. It has a fixed supply, 21 million. That's it, done. Everything else is inflationary. Currency is inflationary. The Fed, the governments print more money, therefore it makes it worth less, and it's happening every year. Even stocks, even Apple can issue new shares if they wanted to. So honestly, Bitcoin is the best tokenomics that I've seen, the best system in place because of this inherent control on supply that you cannot change. And just wanted to talk about that. So going back to the good news, Federal Reserve Chair Jerome Powell says banks are free to conduct crypto activities. This is massive. I honestly never thought we would see this, especially with the narratives that we saw 5 or 6 years ago. You would never imagine the US being so forward thinking with crypto. Especially we always thought that crypto was built to go against the banks. And now you're seeing the banks be like, hey, we cannot let this compete with us. We need to figure out a way to integrate it, to work with it, and offer it to our millions of customers. Having that big distribution, it just makes a lot of sense. And so this is something that I've been talking about with a lot of people in the industry. And I think my guess is my prediction is going to be correct. So we'll put this out there. I envision that centralized exchanges will cease to, it's going to be very challenging for them because the competition now for centralized exchanges is going to start being the banks. And why I say that is even today, actually, I met someone who has an account with a major centralized exchange and they just can't move the money out because they're trying to do the KYC, but they're asking for the documents and it's just a back and forth and it's just not working. So I feel like all banks are going to offer the purchase of Bitcoin, Ethereum, and all, eventually all the top coins. And I think we're starting to see this in the UAE. We have it. WEO personal bank account. You can buy Bitcoin. You can buy Ethereum. And the power of this and the strength, what I love about this specifically is if you have your assets in a bank and something happens to you, there's a whole inheritance plan that happens. Your family's going to get whatever's in there because they have to do that. Whereas a centralized exchange, if your family don't know about it, and they don't even know that you passed away or anything happened to you, that's it. It's gone and they have it forever. So that's something that I've been thinking about, especially that I have kids, is that plus also if centralized exchange goes down, how insured are they? Whereas a bank definitely, they insure their deposits. So that's something that obviously, it depends on where you are in the world. If you're in Lebanon where the banks just all collapse, then definitely not good. The same risk as being on a centralized exchange. But if you're in a country where things are, safe and secure, then it could make sense as a retail investor to just park your money in something like that. In a bank. So this is fantastic. This is great news. Again, my prediction is every bank in the world is going to offer you the opportunity to buy Bitcoin and all the major coins. And on top of that, more news in the regulatory space is Michael Saylor tweeted this. So Bitcoin has been recognized as a reserve asset by the U.S. housing system, a defining moment for institutional BTC adoption and collateral recognition. So the idea here is that the U.S. federal housing is going to issue a directive to consider cryptocurrency as an asset for single-family loans delivered to Fannie Mae and Freddie Mac. So you could use your crypto to pay the deposit. You could use your crypto to pay off some of the housing payments. Essentially, saying that crypto is legal tender, and making it official. So I love these memes, and I'm always going to share them with you guys because we need to laugh a little bit in our lives. Life can get very intense and serious, but you approve the mortgage based on this bag of fart coin. It's just making fun of the meme and potentially having these conversations with your bank, but I don't think that's going to happen, especially with the fart coin. Okay, so moving on, I wanted to discuss this LinkedIn that I found with Anton Golub. Great. He posts really great content on LinkedIn. So the Fed kills reputational risk, rules that bank used to block crypto companies. No more reputational risk excuse, no more operational choke point 2.0, No more shadow bans on founders for building in crypto. He said it clearly. The Fed Chair, Jerome Powell, said it clearly. Banks are perfectly able to serve crypto customers as long as they manage the risks. And if there's anything banks know how to do, it is manage risk. Regulatory revolution because of Trump's return to power. So the Fed dropped, as he said, SEC's anti-crypto accounting rule removed. FDIC exposed for pressuring banks to cut off crypto firms. Essentially removing all the red tape to really push the industry forward. I've had a chat with some neobanks this week as well. And the stuff that they're planning is really, really exciting. And so for the last 4 years, crypto founders were guilty by association. Even here, it was very difficult as a crypto company to open up a bank account because of all these risks. But now there's ways to mitigate against it. And now we're starting to see that banks can now serve crypto, which is a fantastic piece of news for this week. Moving on. Okay, so in the news, Anthony Pompliano has raised $750 million in the largest fundraise ever for a public Bitcoin treasury company. They now hold more Bitcoin than GameStop. The race is on to acquire as many Bitcoin as possible. And so here he put the top public Bitcoin treasury companies. You have MicroStrategy, obviously, with 592,000 Bitcoin. We did a video about this specifically. Go check it out after this. That is insane. So they're number one. Mara Holdings has almost 50,000, and here you have the whole list. So ProCap is I think is theirs. It's almost 5,000 BTC. Now this is interesting. Obviously, like this is a lot of Bitcoin that's being held now by institutions and by corporates who are putting it on their balance sheet. But my concern is if this gets really big and then a lot of companies do this and they start leveraging to buy more. I hope they just manage the leverage part of it, because that's usually what ends up creating this bubble, and then you end up seeing the bubble blow up, and then we all get affected by it because of reckless risk behavior in terms of trying to be greedy and trying to get more. You're trying to get more Bitcoin with unsustainable ways. So that's something I want to keep an eye on. Of course, this is why we're seeing Bitcoin at the price that it's at, because of all this demand side pressure. And I think this will continue for this year. I think this is the main, I want to say the main theme for this cycle is this race to buy as much Bitcoin as possible. As long as they do it responsibly, I'm okay with it. But I think MicroStrategy has already done some leveraging a little bit, maybe too much for my liking, and I hope the others don't follow suit, because that tends to be the downfall for this. So MicroStrategy's BTC gain of 85,871 is worth $9 billion year to date. They have led the way. They are the pioneers in this space. It's been fascinating to watch someone accumulate so much Bitcoin in the past. I don't know how long they've been doing it. 7 years, I want to say. But it's really impressive that they figured it out, and hopefully this pays off for them. And we'll see how it goes. Obviously, he has his haters who think he's doing it. He's growing too fast, too big, too fast. But just a fascinating thing to see. So this is just touching on Anthony Pompliano again on his move to do this, and just talking about the others that are doing the same thing as well. I love his podcast. I watch almost every single one of them just to see what he to see the latest moves that he's doing. But it's hopefully one day ICN will start adding Bitcoin to our treasuries in the same fashion, $750 million as well. But definitely, it's a great strategy. Just be reasonable and be mindful and sustainable with it. So next up, I wanted to talk about the stablecoin mania that's been happening. Again, Bitcoin and stablecoins has been the main themes this cycle, and we can't ignore what's happening, especially when you start hearing the likes of Visa getting involved. And Visa CEO was on an interview this week talking about how we've been preparing for this moment for years. And I actually met someone last week who worked in Visa's digital assets business unit, essentially. And yeah, they've been working on this for such a long time, and it makes sense. Obviously, they're the biggest payment processors ever, and they understood that this is coming, and they need to figure out how to be involved. And so now the Visa CEO just went on CNBC to say that they're preparing for this moment for years. And why now? The US did just pass the Genius Act, a stablecoin bill that opens the door for banks, retailers, and fintechs to issue their own digital dollars. On top of that, the SEC made it crystal clear: digital dollars used for payments, fully backed one-to-one by real assets and not securities. And here's what Visa revealed. So they have already settled $225 million in USDC, $150 million merchants ready to plug in. 5 billion Visa cards can be linked to stablecoins. They're enabling stablecoin wallets in 30 to 50 countries with currency volatility, and they're scaling this globally with the full Visa network. As we talked about before, there's a lot of opportunity in the ecosystem of stablecoins. Visa is a publicly traded company. You can buy their stock on the stock market. So this is definitely, if you're seeing news like this, obviously none of this is financial advice. I'm just here to, talk about the news and see what's going on. I'm definitely not a qualified financial advisor, but if you look at what's happening, if you see something that's massive like stablecoins, especially within the industry and the product market fit that we're seeing, then look around and see what companies are benefiting from this, what companies are creating new value and innovation, and then you start to see where the opportunities are. And the biggest institutions on the planet are racing to win the next battle in global payments. Bank of America, Stripe, PayPal, MasterCard, Standard Chartered, Citi, Wells Fargo, Fidelity Investments, Revolut, Amazon, and Walmart. The list goes on. The message is clear. This is a race to own the financial stack of the future. Banks, big tech, crypto-native infrastructure, all are converging and trillions are up for grabs. This is a great piece. Fascinating to see traditional finance adopting technology that makes sense. Absolutely makes sense. So we're seeing also Amazon and Walmart. We talked about this last week, but this is starting to build up even more. They are planning I haven't seen it. I haven't seen direct news from them, but I've been seeing it all over LinkedIn and X. Is that they're coming to create their own stablecoins to kill the $143 billion in bank fees that they have to pay every year. And when you're working in an industry where the margins are super thin, 5%, 6%, and now you have payment gateways that you have to pay, even if it's 1%, 1.5%, those are huge numbers, especially if you're doing revenues of tens of billions of dollars. Every 0.1%, 0.5% is massive in terms of profit saving. And so they understand this, right? So every time you tap a card, 3 players take a cut. Visa and MasterCard take 0.14% network fees. Stripe takes 0.4%. I think this is on the lower spot, brother. Lower end, if you probably have like huge volumes. And the biggest part is 1.8% goes to the issuing banks, called the interchange fee. Oh, so that's what it is. It's like usually 2.5%. Last year, Visa and MasterCard, $19 billion, processors, $30 billion, and banks, $143 billion. That's real toll on US merchants that, the CEO of Visa and MasterCard are getting paid very well. The same with the banks and the same with the processors. Like, that's a lot of money that should go to the ones who are selling stuff and creating value in products and innovation. And I think they've obviously benefited from this for the longest time. It's time to kind of like split that pie equally, make it fair for everyone. Let's pay wages. Let's pay better wages to the people working in Walmart. Let's give them $20 an hour. And with this kind of structure, I hope that's the way that things will move. I hope it's going to be more equality for the workers instead of it going straight to the banks and the card processors, because we need to have a more equitable society, especially now with AI that's coming. We need to make sure that everyone is taken care of. I'm going to be called a socialist for this, but you see what I'm saying? Like, there's a lot of potential. There's a lot of ways to split this pie fairly, and I think that's what stablecoins has disrupted. And it's just fascinating to watch this from the sidelines. I mean, it's honestly really, really cool. Okay, next up, I wanted to talk about MasterCard and Chainlink's Labs. They just teamed up to let 3 billion plus cardholders buy crypto directly. So we saw Visa making moves. Now we're seeing MasterCard making moves, but MasterCard is tying up with Chainlink Labs, which are the biggest oracle on-chain, which helps bridge, I would say, the real world with on-chain smart contracts. So this is the traditional way. You swipe your MasterCard, fiat is converted to crypto off-chain, then pushed on-chain manually. The new model, Chainlink and Mastercard, you swipe your MasterCard, your fiat goes directly into a smart contract on Uniswap, fully on-chain settlement, no centralized exchange in the middle. Your card is your wallet trigger, which means instead of going to Coinbase, buying USDC, sending it to your wallet, then using it on Uniswap, you just use your card inside a decentralized app, and the whole process happens under the hood, powered by a full stack. Chainlink Labs, MasterCard, Zero Hash, Swapper, and Uniswap Labs. And why does this matter? It's a huge step towards compliant DeFi. real-time swaps, on-chain by default, smart contract-based commerce, regulated card-native flow. Super fascinating stuff. I love this stuff. I've been following DeFi for the longest time, and I know the challenges and the user experience, user experience challenges that they have. And now having the distribution and kind of ease of MasterCard and Visa, plugging it into seeing Chainlink's logo next to MasterCard, just like the whole thing is becoming very credible and very exciting. Okay, next up, I wanted to talk about the M&As that have been happening in 2025. So much going on. I'm going to talk about them. I'll talk about them quickly, actually. So this in 2025 so far, from January till now, we've seen huge acquisitions happen. We've seen the $2.9 billion Coinbase acquisition of Deribit. We've seen Kraken buy NinjaTrader for almost $1.5 billion. Huge acquisitions happening in this space, completely making these exciting moves that are finally giving potential to projects building in the space to get acquired by the big giants out there, right? So I think 5 years ago we would never, we kind of assumed that you would see some of this, but like now it's just getting to a point where it's happening, and you're seeing these huge multi-billion-dollar transactions happening as well. And on top of that, we're starting to see huge IPOs, right? We saw USDC, we saw the Circle Group, essentially, Circle Internet Group go public in June. They raised $1 billion. I think they're trying to raise $600 million, but they actually went above that and raised $1 billion. The largest crypto public debut so far. Gemini, the Winklevoss twins, are also just filed confidentially with the SEC in June to list. Bullish by Peter Thiel. OKX, the crypto exchange, signaled early plans as well. Kraken, the US exchange, parents streamlining for a potential IPO in early 2026. BitThumb, the South Korea's #2 exchange, is planning to list on Kosdaq. Animoca Brands announced plans to list in New York, targeting 2025. A lot of IPO plans, which is very exciting to see. All right, so we'll move on, and we're gonna just talk about a couple of things left here. So, yeah, we'll talk about the IPOs just quickly. Circle listed at $31. It now trades over near $200, up 530%. We talked about this last video that digital assets projects going IPO, doing a 5x in such a short amount of time is really cool, and it's fascinating to watch, even with the war in the background. But yeah, it's completely fascinating. I'm excited to see more listings happening. So let's wrap it up and go through some of the watch lists that we have, see how the market's performing, and I wanted to show you guys what I'm doing here. So let's just open this up quickly. Start with the OGs, my favorite, the OGs. So what I like to do here is, let's just update this. Okay, we'll keep it as it is. So Bitcoin, $107,000. It's up almost 30% over the past 90 days, still doing quite well. It's down 4% from its all-time high, so I think it's going to probably touch that again in the next couple of months. Not financial advice. We'll see what happens. I'm just giving you my predictions here. Ethereum, still 50% from its all-time high. Nothing really fascinating here. I think Hyperliquid has still been, wow. I think it's been the clear winner this cycle. Let's have a look at its performance over the past. So when did they launch? They launched at $6. Wow. They launched in December of 2024. So they've only been around for 7 months now, and they have been absolutely crushing it. So I think when they first launched, they peaked here, and then they bottomed out in April, and from $10 in April, they've done a 3.7x up until now, and even during the war, they were still very strong. Super interesting. I love the story around Hyperliquid, and I think they're going to be the stars of this cycle for sure. Sui, a little underperforming over the past let's say 90 days. Chainlink and Toncoin is 66% down from its all-time high. Let's look at Made in the USA, because that was the main thing that we talked about like a couple of months ago when Trump got into power. XRP. Any standouts here? Well, only Artificial Superintelligence Alliance is up 30% over the past 90 days. The rest are underperforming. All right, so here are all the watch lists. You can find them from a lot of our videos. I think I'll ask the team to put the links in the below. These are all public, and you can have a look at the plan. So this was our plan for 2025 that we did a whole video on from Bitcoin. So if we did this, and Bitcoin is up, Ethereum is up, Hyperliquid is up, the rest are not doing so well, which is fine. All right. So I wanted to get both sides, so we keep this channel, two sides to everything, right? So this year, this crypto beast is like, this year I'm selling everything. I'm 100% serious. That's when the crypto cycle the tops, just like 2021. How do I know? Because the same signals always flash before the blow off top. So here, he thinks that we are at the top of the market. Everything's overhyped, and he has his reasons. So Bitcoin profitability index, 300% overheated territory. Again, a lot of institutions are buying Bitcoin right now, so that could be the reason why. And MVRV ratio is 3.0, classic overvaluation zone. So yeah, I mean, while influencers scream 250,000 Bitcoin, I'll be quietly selling to them. So he thinks we're at the top of the market, whereas this person, what does he think? He thinks that Bitcoin is at the top, and he's going to move things towards ETH. So ETH will 3x, SOL will 4x, low caps will 10 to 100x. So he thinks it's actually going to flip into the meme coins. Flip into the altcoins. Let's see if that actually happens. And then I wanted to end this on this chart about innovation, which I really liked, or technological disruptions over the past 1,000 years. So we had the printing press, telescope, steam engine, and then here just Model T car, polio vaccine, and Bitcoin, iPhone, Bitcoin, EV, and now AI. So Bitcoin has officially made the technological disruption chart. All right. So with that being said, thank you for joining us today. Please subscribe if you haven't already. It really helps us, encourages us to keep making these live videos. We come live every week. We're going to change the timings now. We're going to be doing Thursday evenings. So just follow the Telegram. Check out our social media handles, ICN Web3 Media, across all social media, to make sure that you don't miss out the next live. See you next week. And thank you again. Crypto Code out.